What's going on, Austin, Texas? Thanks for tuning in. Today's episode is all about the Austin housing market and what the heck is going on with it. But first, I want you to leave me a comment below and let me know if you think it's going to crash and burn, if the bubble's about to burst, or if we're just leveling out. Make sure you stick around for the entire episode because we're going to jump into it right now. Did you leave me a comment below? Well, if not, no big deal. Austin housing market in today's world has come to an absolute crawl. And so if we look at August of last year versus August of this year, there are some major indicating points that I want to discuss. So let's jump and take a look at those. So if you're looking at them, August 20 of 21, the median home price in Austin, Texas was $540,000. Now the closed sales for that month was $1,244 with an average day of 15 days on the market. Fast forward to August of 2022, and the new median home price is now $555,000 with an uptick of about 3%. However, if you look at the closed sales, they are down to $858. Now that is a 30% drop in home sales from last year to this year. And if you'll also notice, the average days on the market has jumped up 10 days to 25 days. So what do these numbers on your screen really tell you about the Austin housing market? Well, there's a couple things that I really take a look at. And one of those is, even though the number of sales has gone down from this time last year, the median home price continues to rise. So that tells me that folks that are in that 500 plus range are still out there actively searching, actively buying homes, but it's left a large percentage of people out of the equation. And those are the rest of us that want to be under 500K. And so where does that leave you as a home buyer? Or does it mean that you should wait? Or is it still a good time to buy? And it's not a black and white answer, because those questions have to be answered from an individual standpoint and your financial ability to purchase a home. So to give you an example of what even half a percentage point does, let's look at some numbers. Let's say you found a home for $500,000 and your interest rate is at 6.5%. Now your payment would be around $3,160 a month. However, let's continue down the path that the Fed has and raise that interest rate now to 7%. In order to maintain that same monthly payment, your buying power has been reduced by $25,000, and now your buying power is at $475,000. So you've lost $25,000. So looking at just this simple scenario on how interest rates play out with your buying ability, this should help make somewhat of an informed decision for you as a potential home buyer to look at where this market is heading and where it may lead to, because the Fed has announced that they also want to lower those rates again next year. However, in Austin, as we're seeing, the home prices continue to rise and they're not dropping like they had hoped. A very unique situation. So what makes Austin so unique is the fact that Austin has a very strong job market. We all know that all these big corporations are moving their headquarters to Austin. Tesla, Samsung, Google, Facebook, the list could go on. And for that reason, Austin housing market maintains a strong stance in a national standpoint. Because let's face it, the Fed has purposely driven up the interest rate in order to try to fight the inflation and drive home prices down. And depending on what article you read, some will say that they're trying to drop the home prices 10 to 20%. And in Austin, that isn't going to be the case. Now, we may see a slight drop in price, but not to those standards that the Fed is hoping for. So when you look at these numbers, the under 500K, we are seeing some flexibility in pricing. We are seeing sellers offer rate buy downs or money towards closing costs And sometimes we're even seeing them come down in that 10 to 20% range. However, in the over 500, we're not. We're still seeing some multiple offers. We're still seeing a lot of foot traffic through open houses and people over that 500 purchasing homes. So the question still remains, do you buy now or should you wait? Well, as I mentioned earlier in the video, that is very much an individual situation that we can look at and explore your options. However, I will say, if you do not have some reserves, if you will be living paycheck to paycheck by purchasing a home, then my answer to you would be to wait, put some money aside, get those reserves built up, and then we can go out and look. However, if all those items are in place and you're wanting to get into a home, then now is a great time because sellers are offering rate buydowns. They are offering closing costs. They are coming off the price of the home. And so if you're wanting to get into it, don't let the interest rate scare you if you can afford it, because like I said, the Fed wants to lower those rates and it will happen at some point. So take advantage of today's home prices and not the continuing to rise home prices 6-8 months down the road. Refinance at that point, lower that monthly payment, and have a better situation for yourself. So if you're interested in how rate buydowns work, click the button above, watch that video on rate buydowns. Hope y'all have a great day, and we'll see y'all soon.